Hi guys. Today we will analyze AutoZone stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. In the last year, the stock was a good performer, but there are some doubts in the very recent evolution. The short-term trend is neutral. The long-term uptrend seems to be broken, so, the long-term trend looks negative. Support levels are around $1,865 and $1,780. The next support levels are around $1,650 and $1,520. Resistance level is around $2,000. The next resistance levels are around $2,050 and $2,100. In the last month the stock has been trading between $1,759 and $1,975 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 0.2 million. This is not a very liquid stock. The stock has been in downward trend since January 2022. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 7% per year, for last 5 years. We see that the average profit margin of the stock has been around 13% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 113% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for AutoZone Company: bad, average, and good. First scenario. AutoZone will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be a low, 4%. Future profit margin would be a low, 11%. Future free cash flow to net income rate would be a low, 80%. In this case, the fair value of the stock today would be $1,676. Second scenario. AutoZone will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $2,116. Third scenario. AutoZone will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 13%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $2,627. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 110.62. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For AutoZone, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 18. Again, I will use 3 different scenarios for AutoZone Company: bad, average, and good. First scenario. AutoZone will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be a low, 4%. Future P/E would be a low, 14. In this case, The fair value of the stock today would be $795. Second scenario. AutoZone will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 17. In this case, the fair value of the stock today would be $1,052. Third scenario. AutoZone will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 20. In this case, the fair value of the stock today would be $1,348. As you can see, today the stock is overvalued, $1,952, even if we expect the company's high performance in future. AutoZone has a medium financial health rating, its profitability is only medium as well. While showing a small growth rate, the stock is too expensive at the moment. Also, the stock has been in downward trend since January 2022. It may drop lower. I may consider buying the stock when the stock drops below $1,500. Company strengths. AutoZone is an American retailer of aftermarket automotive parts and accessories, the largest in the United States. AutoZone has over 6,400 stores across the United States, Mexico, Puerto Rico, and Brazil. The company expects comp sales to be bolstered by enhanced commercial programs and an improved in-stock position. They also expect modest international expansion and a stronger e-commerce presence. Growth potential from a combination of new store openings and same-store sales growth, stellar cost performance, strong gross margins, and aggressive buybacks. The company offers national brand and private label products. According to management, more than 50% of the sales mix is private label. The auto parts sector generally benefits from an older fleet of American cars, which need more repairs. More than 80% of the U.S. auto fleet is more than 4 years old, with an average age of 12 years. The average annual repair cost is over $800 per year for cars that are 6 to 12 years old. AutoZone's return on assets of 16% is amongst the best returns of the industry. Its profit margin of 15% is amongst the best of the industry. Risks. There are two main concerns: competition from Amazon and other companies, and the possibility of a decline in business as electric cars gain a bigger share of the market. Analysts forecast slower growth as the economy recovers from the recession and new car sales rise. The recent increase in oil prices as well as high do-it-yourself exposure pose near-term headwinds. The company has significant debt, and it has negative shareholder equity, which is a more serious situation than a high debt level. Weather is another risk. The company doesn't benefit if the weather is so mild that parts aren't being used or worn out, but it also doesn't want such harsh weather that customers stay home. Highly cyclical and seasonal nature of the auto parts retailing industry. AutoZone is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow only by 6 to 8% yearly. In the coming 5 years, the earnings per share will grow only by 8 to 10% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.